What do you make of some of the moves by the authorities this week, the reports suggesting that the government might actually be sort of mopping up some of these unsold homes now? How significant could this move be, particularly when you look at the wealth effect? And when do you think such initiatives and moves by the government could actually start to move the needle in terms of the new home prices and bringing back some of that demand? When do you think that will show up in the numbers?
So I think in terms of how long it takes to show up in the numbers, right now we still really haven't got an announcement. In the April Politburo meeting, we know that the government said that they're now studying the measures. But I think if they are really serious about that, given the signal from the top, I think we could get some measures maybe pretty quickly, maybe even June and before the Politburo meeting. But in terms of even I think if we give a pretty best case scenario of maybe money going out to the local governments to buy some of the unsold properties, I think it will really take some time to really fit into the house prices, because right now the confidence of people are still pretty weak. So I think the best case we're talking about is that maybe house prices could be stabilizing around the turn of the year. And I think for the investments, because there's really structural mismatch between the demand and supply, and I think it's still going to be some correction for this year before some stabilization, maybe in 2025. But I think in terms of this measure, I think the most significant takeaway to me is really about reducing the downside risk to a continued downward spiral between the house prices and sales. Because if we look at what happened in Japan or in Hong Kong, it actually took a pretty long time for us to see the house prices correction, talking about like a 7 or even 10 to 20 years of a lingering impact on the household confidence if we are not lucky. Yes. So I think it's now that the government really noticed that this is getting very serious, and they make a shift about the attitude towards this.
Absolutely.
So I think this is pretty significant. And to be fair, already a lot of negative downside risks have already priced into the market. So that's why we're really seeing the property stocks reacting positively to this news.
Michelle, can you give us a line on the currency? And despite the manufacturing trade surplus, the balance of payments surplus, we are seeing pressure on the Chinese currency. Is that down to the fundamentals still? Is that down to strong dollar? And where then does that leave Beijing's reaction function in addressing this?
I think, lately you look at the currency, given the weak CPI from the US, actually it is sort of having some support from that. So at the end of the day, it really still boils down to how the Fed is managing the inflation problem in the US. But I think for China, I think what people are concerned about is probably what is happening on the geopolitical fronts. For example, for this week, we had some tariffs implementation by the Biden administration on China goods, and I think to some extent it's positive to see that it is very measured, very targeted. So we don't really expect any significant macro impact from that tariff measures. But I think the investors could be fast forward looking to if the Trump wins the U.S. elections at the end of the year, then what that means for the tariffs, the trade policy for China, and maybe to some extent people are pricing in some from the options. Definitely, we're seeing some pricing in of that negativity to that.